Well, times are certainly more unpredictable, riskier, maybe even a little darker. As we say, these are challenging times. And, the idiom in Mandarin, which is may you live in interesting times. Well, we have those interesting times, but it also means may you have the fortitude to withstand those interesting times. So now the challenge is, do we have that fortitude? And we are facing a lot of obstacles. So what we want to cover is a couple of quick things. One is when people say this time it may be different, well, usually stop listening when someone says this time it may be different, because it rarely is. Now, we've seen examples where that has been the case, and the challenge here is, well, is it really different this time? We have a pervasive uncertainty and volatility globally. And the issue is, does that resolve itself, or are we in for a long haul where maybe things are really different? So one of the real challenges are central bankers who usually, with reasonableness, have their hand on the tiller. While we may have some volatility, there's sort of an anchor that we can depend on. And I don't know if we can do that these days. That's something we're going to discuss. And so, of course, there's a lot of meddling, a lot of political involvement, and a lot of things that make this whole time much more challenging than maybe it ought to be. And that's why the question is, are we in for some long, dark days? And if we are, what do we do about that? So is it different this time? Well, risk is higher. I mean, we've got a lot of volatility and uncertainty that I don't need to speak about in too much detail. The war in Ukraine, inflation, a lot of these things that are interrelated. There's trade wars, trading blocks, all this stuff, right? So is it a black swan? Is it a Black Tuesday like in 1929, and are we in for 4 years of real decline? Or is it like the other blacks, whatevers, right? It happened in 1987, it happened in other days where it just lasted a brief time. We were able to recover with some resilience. And so, the challenge is, are we in for a more extended time? So one of the real challenges is that, I also prepared a presentation. I called it Stimulus and Silliness. And I think that throwing so much money at so many things where we now have some data that shows it's been fundamentally inefficient, wasted, and more money being thrown at more and more problems that doesn't solve anything because there's no direction, there's no focus, there's just the political appeal of having money available. And that is usually to our detriment in the long term. So I think it is fundamentally silly, and I'm sort of glad that we're holding up some of the multi-trillion-dollar nonsense that's being discussed these days, but I don't know how long we'll be able to hold out on that. And that's where I get at kind of, it's political absurdity. There are certain things happening that require a steady hand on the tiller. We don't have that. We've got extremes that are sort of running things, whether it's in the United States, whether it's in Europe, whether obviously what's going on with Russia and China. And, there's a global issue that's been discussed more broadly. But one thing is for sure, we are not handling things in any decisive way, and half measures never work, and the world is full of nothing but half measures. Pick any issue, and there's nothing decisive going on. Whether right or wrong, there's just nothing happening. So somewhere in between, which is the politically expedient solution, leads us nowhere and usually leads us downward. So one of the other challenges, obviously Ukraine is magnifying this, but there is political fragmentation globally. And now we're seeing influential economies that are separating, that should be coordinating. China and the United States is one primary example. Even things going on within the European bloc, then between the United States and Europe, then Asia and Europe, and India and other economies that really should be working in a coordinated fashion, and the opposite seems to be happening. And so one of the things that we're seeing is, well, there's now an Eastern energy bloc. So you've got the war in Ukraine, and sanctions have forced Russia to work with China and India, and then also with Turkey and then Iran. So now there's an energy bloc, much to the West's detriment. And that's formed, and that's been forced because of our inaction on what's happening with Russia and Ukraine. And instead of coordinating with China, instead of looking upon India as the ally that it truly is, we've sort of gone within ourselves, and that is, again, much to our great detriment, because now we're creating all these separate, blocks, and I call it blocks of blocks, right? There's a European bloc, but a Western European bloc, an Eastern European bloc. Hungary in and of itself as being its own bloc, as it were. And that magnifies over and over again. But what we are doing is anything but the thing that will lead us out of this darkness. So we've created this pervasive uncertainty and this volatility in financial markets and economies, and that all cycles back and forth. So my point, stocks and bonds are quite confused, right? So we had a pretty good run of stocks from March of 20 when the pandemic sort of emerged up until just a few months ago. And then suddenly we've had this great correction. There's been a lot of volatility. Bonds are even more volatile than stocks because of interest rate uncertainty, because of inflation, because of dramatic moves by the central bank, which we'll talk about in a little bit. But essentially, the VIX, which is a measure of volatility, that volatility has been extensive and high for a while. And people dismissed it initially as, well, it's the pandemic, we're coming out of the pandemic, it'll be okay. But that's not what's happening. This volatility is much more than the pervasiveness of a pandemic. It's just the kind of this pervasiveness of sort of ill-gotten policy that is sort of going throughout the markets. And the other thing that the markets are finally realizing is that there were a lot of valuations, especially on the technology side, that essentially depended upon perfect implementation with a non-competitive response. And that's just not the way the world works, right? So you'd see these companies that are not profitable, they're growing, but they're not profitable, and they're assuming that a competitor will make no maneuver to, fight against any of that company's competitive positioning. And Tesla is maybe the best example, right? So people were valuing Tesla as if it's going to be the only electric vehicle, it's going to be the only car offering that opportunity, it's going to own 80% of the market, right? Well, it's not as if General Motors and Ford and BMW and Mercedes are going to sit around and just give that market away, right? So there's competitive response, there's valuations that just don't reflect reality, and now we're finally seeing that reality is emerging, right? So we're having that, just as we had in the dot-com era, that sort of what were we thinking? It's like, well, this is an interesting company, but it will never make money. So it's pets.com over and over again. And we're seeing a lot of those valuations shrink because they just depended on assumptions that don't reflect reality, right? And the other sort of steady hand on the tiller, I call it, central bankers disagree. I mean, one of the things that we always seem to depend upon is central banks being the voice of calm and reason, right? And they are neither these days. When you have the head of the Fed, and I respect Jerome Powell greatly, but him going, well, don't worry, inflation is transitory, it's not a problem. Oops, we were wrong. Let's raise by 750 basis points, interest rates, right? And so that's absurd, right? And so we're seeing more and more of these kind of, knee-jerk reactions, and we're decoupling from the other central banks. So in Europe, they only recently raised interest rates, but they raised rates for the first time in 12 years or 11 years. The Japanese central bank is not raising rates at all, right? So we have this global inflation, global supply chain disruption. We've got a lot of upset in global economies that otherwise are integrated. And now the central bankers are disagreeing among themselves, and we're disagreeing and changing those policies. And that great line from T.S. Eliot, that there'll be visions and revisions that a minute will reverse. And it seems that our central bankers are doing just that, right? And so when we have the US and Japan and Europe on different planes, I say different planets, right? Then we've got a real challenge as to how we'll kind of deal with this volatility. And so what we used to depend on are sort of rules. And one of the things that the central bank depended on, they called it the Taylor rule, based on work from John Taylor of Stanford, where he said basically all you need to care about is inflation and GDP growth, right? That's your role. The market economy takes care of everything else. And so there's a very simple rule, and here's how we establish policy. Well, that's been tweaked, and it's been modified, and it's been added to, and it's been revised to the point where it's almost meaningless now. So now rules are whatever we can tweak, right? So there's wide disparities even when there's supposedly an application of a rule. So that simple rule is turned into 7 different steps, and those 7 different steps give different outcomes. And so essentially that means we have no rules. So we're getting political meddling. When people are saying that the Fed should also care about ESG policy, right? And fundamentally, ESG policy is an ill-defined concept. So no one even knows what it means. And how do you modify that via central bank interest rate manipulation, right? All of this is just silliness, right? But they think it's important, and there's meddling and control, which means there's always a worse outcome. And that's what we have: unprecedented meddling, unprecedented control, and that's giving us worse outcomes. So Do we have long, dark days ahead of us? Well, we have dark days for sure. I think that you've got violence and you've got import, export restrictions. You've got policies that make no sense. We're going to onboard all of our supply chains within one nation. We're going to have, policies that can't be implemented. So I say that's, scattered and unfocused. They make good political fodder. Give a speech saying, all of our chip making should be within the United States. Great. That gets a round of applause. That's nonsense. It can't happen, right? But we're going to have policy that's going to encourage it anyway, right? And we have, again, within our world leaders, whether they're economic leaders, central bankers, business leaders, we expect a level of performance that we're not getting. We're getting incompetence and we're getting unreasonableness. We're getting selfishness, we're getting short-sightedness, we're getting all the things that don't work if we want to come out of the long, dark days, right? So what ends up happening is meddling leads to a downward spiral. So I would tell you otherwise, look, the situation we're in, it's a cycle, these things happen, we can come out of it relatively quickly. Okay, we've had supply chain disruptions. Yes, we've got inflation being driven by multiple policies, including too much cash, but also supply chain. So you've got demand side, supply side, money supply side. You've got all of these things working, but that ultimately does resolve itself over time. But when there's meddling and there's the kind of interference and incompetent leadership that we're experiencing, we're out for more extended, let's say, dark days and volatility. So this fragmentation, weak leadership, we're vulnerable. We've got supply chains that are vulnerable, competitive situations that are vulnerable, political situations that are vulnerable, people vying for control. And we're not seeing, honestly, the kind of coordinated leadership that really enhances everyone's lives and makes everyone's life better. We are simply not seeing that. So yes, this time it may be different, meaning it may take longer. In fact, I believe it will take longer to resolve itself. And that's because we have this pervasive volatility, this uncertainty. We don't have the kind of leadership we need. The world's become fragmented. People who tend to lead, the central bankers, the coordinated efforts, that's not happening. The kind of political coordination, economic coordination that we expect, if you will, it's turned into minor adjustments, which basically mean tweaking and interference, and where nationalism and social policy and speeches that sound good but lead to disaster are sort of taking the center stage. So yes, we have some long, dark days ahead, but I also think that it's going to take longer. It will resolve itself. It will be more volatile. Of course, it will be okay in the long term, and people who bet on the short term, I think that's a game for fools as well. But we've got extended difficulty ahead of us because of all these extraneous factors that honestly shouldn't exist, but they do.